Okay, we will continue with the actual 10K report for Berkshire Hathaway. And we can see there's a lot going on this page. It's largely, it's a Securities and Exchange Commission filing. So it's a dense amount of information, but we can see it's for the 2019 fiscal year. We can also see Berkshire Hathaway's IRS uh, EIN listed there, as well as its address. And this section here is a good reminder that these reports, these financial reports, are used for multiple purposes. So when we think about a 10K, we often think about the common stock. And Berkshire, of course, has two classes, the A and the B shares, but they also have a number of debt holders, and debt holders use the financial statements to try to understand the creditworthiness of their investment. So you can see all of these different notes listed here in order of their maturity out through 2059. So quite a number of debt issuances by Berkshire at the parent company level. Berkshire Hathaway Energy, as well as the railroad, also file 10Ks of their own and have debt of their own, which is not guaranteed by Berkshire. This section down here, the number of shares outstanding as of year end is further in the report. For this report, it's as of February 13th of 2020. So this is the actual number of shares. But it's important to note that the market value listed here, one, it's as of June 30th, 2019. And it's also by non-affiliates. So there's quite a heavy insider ownership by Berkshire Hathaway management and its board, led by Buffett himself. So this market value is not the market value of the company, if you're using that as a measure. This is a pretty standard table of contents. Most SEC reports, the 10Ks, 10Qs are sort of laid out in this format. These items are standard 10K SEC items. Nothing really of note there. Here we get into the business description, and of course it's almost impossible to describe Berkshire Hathaway other than a holding company with a large number of diverse business activities. And it does go through most of the major businesses, and I won't go into depth in each one, but we'll at least cover where they're located, some things to maybe pick out in each section, and we'll go from there. So one thing that Berkshire does point out here is that its businesses are managed on an unusually decentralized basis. So a company as large as Berkshire Hathaway, typically in corporate America, is more heavily managed from the top, and Berkshire Hathaway's operating philosophy is delegation just shy of abdication. So the business line managers are the ones that essentially they don't actually own, but Buffett wants to give them a feeling of ownership. And so he gives them huge amounts of autonomy to operate their businesses. So what does Berkshire headquarters do? What does Buffett do? Well, there's no centralized HR, marketing, legal, and so forth. What Berkshire does at the parent company level is basically pick the chief executive to head each operating unit, establishes this tone at the top message, which Buffett communicates from time to time and really regularly through all his communications, that it's much more about Berkshire's reputation and doing the right thing and doing well by doing good and it's important for them to communicate that from the top down. And Buffett hopes that all of its managers continue to do that on the subsidiary basis on down. So Buffett picks the CEO, and his job is major capital allocation decisions, which of course is mainly the investments. So we can see Berkshire's subsidiaries, all but 30 are in the subsidiary level, almost 400,000 people at year end 2019. And here we get into the specific, some of the major business lines. And of course, insurance is a big one, and reinsurance falls under that broad category. So just a couple things to point out. Again, I won't read this verbatim, but just to point out here, it's important to go through these sections and get an understanding for what the business does. And hopefully, in Berkshire's case, they do a very good job of explaining what they do. In some reports, you really can't get an idea. And Buffett has actually said that if that's the case, it's usually a failing of the management team, not you. So Berkshire tries to lay this out in plain English. So basically, the two categories of insurance, the primary or direct, that's the insurers taking on the risk directly from the insured. That's pretty straightforward. Reinsurance, there's basically two broad categories. Treaty is essentially everything. The insurer agrees to take a set of risks. And then the facultative reinsurance, is specific underlying risks. So treaty is basically will define it up front, and any business that the primary insurer does, the reinsurer will take all of that defined business. The facultative is essentially a pick and choose type of coverage. And it's further delineated by the quota share. So it might only be a percentage of business from that primary insurer, or it could be an excess of loss type arrangement where the primary insurer says, I only want to keep so much risk, and anything over that, either don't have the capital capacity, the balance sheet to handle it, or they don't want to, and they might not want to because they want to continue to write business and essentially use the reinsurer as a means to offload that business. Of course, the insurers are heavily regulated. It talks a little bit about that. There's two broad types of insurance regulation, for lack of a better term. The admitted insurers essentially file with each insurance regulator a set of standard rates. And then, so that's the admitted type of business. And then excess and surplus is essentially everything else. If an unusual risk comes up and it falls outside of what an admitted insurer can do, they typically look to the excess and surplus market, which essentially opens it up to almost anybody to bid on the business. And Berkshire is involved in a good number of that type of insurance. So for just the insurers, Berkshire's insurance companies themselves, $216 billion of capital at year end. And of course, they're very highly rated. This is an interesting, feature or development in insurance, which is the federal government has created a program by which essentially the federal government is taking on the risk of a terrorist attack. Because if a large event hit the country, it would essentially wipe out all of the insurers in the country, and it's just a risk that they cannot shoulder themselves. And so the basics of this program are the loss event, the terrorism type of event must be 200 million or more, and there's an aggregate limit of 100 billion. and 20% shared with the insurer, and 80% is covered by the government. Again, I won't go through all of this, but just one thing to point out here, they talk about business development and things happening in the industry. The UK is quite a big center of insurance, and the Brexit, as it's called, impacted that market. And they just talk about Brexit and that they continue to do business in the London market. We'll continue through here to some of the specific insurers, GEICO, and you can see that all of these, GEICO itself, it's often thought of as just one entity, but they do have all these different types of sub-entities that take care of different risks within or under the umbrella of GEICO, as well as separate companies set up for maybe different risks or different sections of the country, depending on how the laws are structured. And Buffett usually quotes the market share of GEICO in his letter, and he did not do that in this year's, but in these notes, we can see the top 5 largest automobile insurers had a combined 57% market share. And that's the data is as of 2018. So as of 18, Berkshire had a 13.4% market share, and management estimates that increased slightly to 13.6% at the end of 2019. The Berkshire Hathaway Primary Group, this is a collection of various primary underwriters. National Indemnity Company Primary has a line. The Berkshire Hathaway Home State companies, these were originally formed because you could only do business in each state, hence home state. And there's a number of these that fall under this category. And again, I won't go through each of these, but you can read about them, what they do, what their markets are. This one here, Medical Liability Mutual Insurance Company, was a recent purchase in 2018. So that's just something to point out, because when you're looking at the results, if there's any kind of major acquisition or any acquisition of any size, it's important to note, because the year-over results are, of course, impacted by any acquisitions that are made. We'll continue with the Berkshire Hathaway Reinsurance Group. And in 2017, they started combining General Re with Berkshire Hathaway Reinsurance Group, which used to be a standalone entity. But they list the several entities that the reinsurance business is written through. National Indemnity has the reinsurance line as well as the primary. And General Re Group is another set of insurers that fall under Gen Re. And like the primary companies and like some of the other ones, there's a number of entities that fall within each category, and those are described here. Lloyd's of London, that's the UK market. It's a collection of Lloyd's of London is essentially a huge market for insurance, and there's all these different syndicates. And General Re participates. They take 100% of the business through this Syndicate 435, which basically means that all these primary insurers are out there writing business and ultimately shipping that off up to General Re, who assumes the risks. There's a life insurance, health insurance, reinsurance line, primarily handled through Gen Re, but there's also some through this Berkshire Hathaway Life Insurance Company. The retroactive reinsurance, which is when most people think about insurance, they think about sort of a go-forward basis. You pay your premium, and any risks that happen, and you're covered for those risks, the insurance company will pay. With a retroactive reinsurance contract, the risks go backwards. So an insurer will have insured an individual, a company, and so forth, and have provided coverage in the past, but they may not know that a risk has happened. So, a prime example of this is something like, uh, directors and officers insurance, where the insurance is provided for a particular year. Time goes on, and it comes to light, such as Enron, that the executives were misbehaving. And so the loss event actually happened in the past, sometimes many years in the past. And that, that of course, falls on the insurer. So those primary insurers and sometimes other reinsurers like to shed that risk that something unpleasant might develop. And it's not just the contract I just described. It could happen in uh, any other type of insurance. It's essentially just a type of insurance that makes more certain the risks that are on another insurer's balance sheet. And Berkshire Hathaway is willing to take that uncertainty in exchange for a premium. And one of the largest, actually the largest that ever happened in the world was in 2017, this AIG contract, where for about a $10 billion premium, Berkshire took certain risks from AIG. So it's a little complex, and even a simplification is a little tough. But in this particular deal, so AIG would pay the first $25 billion, and then Berkshire Hathaway would pay 80% of the next $25 billion. So Berkshire's liability was capped at $20 billion, and it received a $10 billion premium. So Berkshire was betting that either the losses would be less than that $20 billion, and or the timing of that payment would stretch out over a long enough period of time that they could invest the money and make up the difference or more. And of course, that's called the time value of money concept, which is key in these retroactive reinsurance deals. Periodic payment annuities, same thing, time value of money concepts. And then we move on to investments, which they talk about the float being $129 billion at the end of 2019. And that's basically it. We'll talk about the investments separately later on. Moving to the railroad, again, this is a description of the business, so it's important to understand what they do, so that when you start to put numbers on the business, you understand what it means. So essentially, BNSF operates on the West Coast. They have one competitor, and they work with over the 200 short line railroads, which are just these short line railroads. They are regulated. Here we go. Here's the competition. So they talk about Union Pacific, which is the other major rail competitor in the West. And of course, freight can be transported by a host of different types of means. And some of these are laid out here: river barges, ships, pipelines. And a big one is trucking companies. So even though BNSF is 4 times more efficient than a truck in moving freight over long distances, it does face competition from trucks. And, of course, a railroad does best when it moves over long distances, and that competitive advantage diminishes as the line length shrinks. Berkshire Hathaway Energy. So Berkshire owns just under 91% of Berkshire Hathaway Energy, with the other 2 owners being Walter Scott and Greg Abel. And Berkshire Hathaway Energy is a collection of various regulated and unregulated entities, but primarily regulated utilities. And this goes through them here: Pacific Corp, Mid-American, NV Energy. There's 2 distribution businesses in the UK. Altalink is based in Canada. Two of the highest rated from a safety standpoint, and 2 of the largest natural gas transportation pipelines in the United States are owned under the Berkshire Hathaway umbrella. And then they've grouped their renewables business into one category. And of course, regulation is a key part of the utility businesses. And, there's federal, state, local, and in some cases, worldwide, if not regulations, at least these treaties and pacts that these businesses are subject to. Environmental matters, talks about the Paris Agreement. And right here at the tail end, it's one thing some people don't know. It's kind of an interesting little fact that Home Services of America, which several years ago rebranded itself as Berkshire Hathaway Home Services, which is why the Berkshire Hathaway name became a little bit more well known. This business actually is tucked under the Berkshire Hathaway Energy headline or corporate parent. It's a sort of an interesting little glimpse into these little almost just happenstance. It sort of came with Mid-American when Berkshire purchased it in 1999, and it has since grown into the largest brokerage firm in the United States. Continue with the manufacturing businesses, and these are subgrouped into 3 categories: industrial products, building products, and consumer products. And again, we won't go through each of these in great detail. They are worth reading and important if you're going to read this report. And I'll stop when there's some interesting or important things to pick out. So Precision Castparts, that was purchased in 2016, very large aerospace manufacturer. Lubrizol, and here we can see, if you remember from the chairman's letter, he talks about that fire in France. So they operate in 27 countries. It's a very, very, very large and important business, but one that most people have probably never heard of. IMC, International Metalworking Companies. This began as ISCAR and has since purchased all of these different brands, and again, based in Israel but operates across the world. Marmon Holdings, this is an interesting one. Marmon is, if you were to break out Marmon by itself, it would be certainly on the Fortune 500, probably one of the largest, but it's a conglomerate, and a pretty large one in its own right, and it resides within Berkshire Hathaway. And it's broken out into 11 sectors, which holds 100 businesses. And these businesses are operated autonomously, just like Berkshire itself, which is one reason why Berkshire purchased Marmon, because the cultures were so similar. So again, here are the key sectors. There's many businesses with each one, but they are broken out into these 11 large categories. And the new one in 2019 is this medical group. And one little aside, this UTLX, the Union Tank Car Company, that was once part of Standard Oil, the large oil companies founded by John D. Rockefeller. Other industrial products, CTB, that's probably, again, unknown to most people. Liquid Power Specialty. And then we move into the building products companies. Clayton Homes, one of the largest manufactured home builders, and they've recently, over the last several years, moved into site-built homes. So we can see the number of manufactured and site-built homes, and they also finance most of those. In addition to their own, they have a huge financing arm. Shaw Industries, again, a large business in its own right, but tucked under Berkshire Hathaway, is only one of many businesses, but it's one of the largest flooring businesses in the United States. John's Manville, again, worth understanding what it does. And this report gives a pretty good overview of what the business does. MiTek, there are a number of sub-companies under MiTek as well. They've done a number of these so-called bolt-on acquisitions over time. And some of these businesses are well known. Benjamin Moore, it's usually a household name, at least in the United States. Acme Brick, unless you're from the South, you probably don't have name recognition on Acme, although for a brick company, I forget the figure on this, but Acme has, for again, a boring brick company, actually has a significant name recognition in its markets, which is kind of interesting. Moving to the consumer products, Berkshire owns Fruit of the Loom, which has some of these sort of related and sub-businesses, jerseys, these other business lines, Vanity Fair. They also own Russell, as well as Spalding. Some other household names. Garan, most people know this business by Garanimals. They've probably heard, you've probably heard of the company, and most of those are sold. It doesn't say it here, but Walmart has made up the vast majority of their sales over the last few years. And Feckheimer Brothers, they do uniforms. And again, unless you're probably in purchasing for some of these industries, you've probably never heard of Feckheimer. The shoe group has all these brands underneath it. It's kind of a conglomeration of a couple of different brands that Berkshire has purchased over the years. And some of these were those purchases that Buffett regrets having made because the industry just became so competitive. Brooks is actually reported as a separate unit until they made the change with Greg Abel in charge. The CEO of Brooks used to report directly to Buffett because it's a business that Buffett saw some significant growth potential in. Forest River, large RV manufacturer, including boats and other equipment. And here's where you can get some interesting tidbits. So they talk about the industry share. So the largest market share, the competitor with the largest market share at 44%, it happens to be Thor Industries. At Forest River is second at 35%. And those market shares are A, large, but B, fairly stable over time, which gives an indication of the longer-term profitability of the business. And of course, it's subject to consumer preferences and spending habits and so forth. But it's a company that Berkshire has owned for a number of years, and despite the ups and downs, remains a very good business over time. Duracell, that is known to most people, and some important information for readers to note that Costco and Walmart represent a quarter of its revenue. But here again, the market share, 32%, it just dominates along with Energizer, the alkaline battery business. Albeca is actually the parent company of Larson-Juhl. And unless you're in the areas in which Larson-Juhl operates, you've probably never heard of the company. Richline, a jewelry manufacturer. So that concludes the manufacturing businesses. And then we move into the next large broad category of service and retailing businesses. So the service and retailing businesses, it starts with the service businesses. So we'll continue here. McLane is actually it's a pretty big business, but for the profitability that it makes is actually a pretty small part of Berkshire. It only makes a few hundred million a year, which compared to some of the other subsidiaries is quite small. But it's included as a separate reporting unit within the report because its revenues are so large compared to Berkshire's revenues, and we'll see that in a little while. But just to understand McLane's business, Walmart accounts for 20% of its business, and it's not surprising for two reasons. One, Walmart's a pretty big retailer, so McLane, being a distributor, it's a natural customer for it. But McLane was actually once owned by Walmart, and so that share has remained high, probably because it started so high, and because McLane was part of Walmart. So 20% is made up from Walmart, 12% from 7-Eleven, and the Yum Brands businesses make up 11%. So pretty high degree of concentration. And then this notes the three different business units that McLane operates in. FlightSafety and NetJets, two aviation-related businesses, TTI, electronics distributor, and then some of the other service businesses, XTRA, leases trailers, Dairy Queen, another household name, Business Wire. If you're in, if you're probably reading this, you might have heard of Business Wire because they provide announcements of many, press releases and so forth from companies, and Cort, which leases furniture, and then the Berkshire Media Group, which was actually just after this report went to press, Berkshire has agreed to sell the media businesses, to Lee Enterprises. We move into the retailing businesses. Berkshire Hathaway Automotive, 82 dealerships, representing 106 franchises. And they have these collision centers, which are an important source of revenue and profit for these locations. Home furnishings. This is made up of 4 furniture retailers, and again, you've probably heard of at least one of them, depending on where you reside. If you're in the United States, Buffett often will talk about Nebraska Furniture Mart, which has these 3 massive stores located in Omaha, Kansas City, and in Texas, outside of Dallas. The other retailing, there's 3 jewelry stores, including one very high volume store in Omaha, Borshiems. And just an interesting little aside, the founder of Borsheims was the cousin, or actually, I think they were siblings, Mrs. B and Rebecca Friedman. I believe they were sisters. So there's actually a connection there, and why they're both based in Omaha. See's Candy, if you're on the West Coast, you probably know that name. Pampered Chef, Oriental Trading Company. This is one of the Detlev Louis Motorrad was one of the first European businesses that Berkshire has purchased. His car, IMC, probably being the largest and first. And then you move into some of the other business interests that Berkshire has. Almost 20% of Kraft Heinz, which is an interesting story in itself. Started with Heinz, and then with a partnership with 3G Capital, they purchased Heinz, and then Heinz merged with Kraft to create this huge consumer products business. And then they also Berkshire owns, they have a 50% joint venture with Leucadia, which they've dubbed Berkadia. They own 38, almost 39% of Pilot Flying J, which are travel centers along highways, and they have an interest or an agreement to purchase the remainder of that, or up to 80%, I believe, in 2023. And then this 50% joint venture in electric transmission, Texas. This has actually been around for, I think it was formed in 2008. It was part of Berkshire Hathaway Energy, but because they only own 50% of it, I guess it's reported here. So that's sort of the overview of the businesses that Berkshire owns. They are that was sort of the what and some of the industry characteristics, market shares, products that they operate with, and businesses that they have. That's that sort of first overview. And then we move into these risk factors. And Buffett has said, the risk factors that really matter are probably not listed in the 10Ks. But this section, it's important to go through, and, usually it's written by the legal team, the lawyers, put in all these risks just in case they're sued. They can point to them. But there are key pieces of information within this section in most reports, but sticking to Berkshire, one of the biggest risks, maybe not one of the biggest risks, but certainly it's important to note that Buffett's 89, Charlie Munger's 96, and they talk about how if one or both of them leave or otherwise are not around, that's a risk to Berkshire, and they note Ajit Jain and Greg Abel as being underneath Buffett and Munger. They again sort of emphasize that the equity portfolio is pretty concentrated. Continue on, cyber risks. Here's something to understand, that Berkshire is willing to take lumpiness in its insurance results as long as it's getting paid an appropriate premium. It almost doesn't care how the results happen over time, although they do take great pains to sort of try to figure out ways in which losses might correlate or otherwise, precede one another, or add up to some sort of huge number. And here they've quantified it at around 10 billion. They don't think that it will get there, but they've done their best to sort of say, okay, how might these things happen? And something very important to note, that they've thought about that. Some insurance businesses, they might operate in one specific geographic area, and they may not identify that as a risk. But if a large hurricane or something comes in, they've unknowingly assumed a lot of risks. So that's why they've put this knowingly assumed language in there. Description of property. So this just goes through, the properties that these businesses hold. And again, just some interesting things to note. The how many route miles of track. So if there's two lanes essentially on a right of way, that counts as 2 route miles if it's 1 mile long. 25 hubs, 8,000 locomotives, 70,000 freight cars. So there's a lot of stuff, a lot of depreciable equipment in the railroad, which is not surprising. And they've actually quantified here the level of maintenance and repair, which is in addition to the capital expenditures that the railroad has that incurs. The Berkshire Hathaway Energy. So here we can get sort of a broad overview of their generating capacity based on source. The net capacity and owned capacity, just around that 30 to 40 gigawatt hours, which is just huge. They have almost 2,000 megawatts under construction. And then here, you really just, it's worth reading, but you get a sense for just how much infrastructure is in place within all of these different businesses. We go through here in the other segments. So that was, BNSF and the energy businesses, which are very capital intensive. But they've taken some time and to go through and identify the properties within these other segments. And I'm not sure how much value is actually in this table. The SEC requires that this is in the report, but you get a sense for the size of some of these operations. McLane having 57 owned and 28 leased properties. Berkshire is expansive. This section reports will list any ongoing legal proceedings, and most often, they'll identify whether they're material or not. And Berkshire has said that they don't think they will have a material effect on its business over time. Mine safety disclosures, these are probably more applicable to the energy business, but there's nothing, they do have them, but they're attached as an exhibit. The named executive officers, so these guys are all in the proxy. You can see what they make every year. Buffett, of course, 89, Munger, 96, and the young folks here, Greg Abel, in charge of the non-insurance operations, 57, Ajit Jain is 68, and the CFO, Mark Hamburg, who's been in place for a long, long time, is 70. Part 2 here talks about the holders of the stock, and this is sort of misleading because the 1750 record holders of Class A and 19,000 of Class B, those, if you had 1 million separate owners under one brokerage house, it's just reported under one, just the brokerage house, which is called street name. So that doesn't really reflect the actual number of owners of Berkshire or any company. But Buffett estimates it at least 1 million. Dividends. Last time Berkshire paid a dividend was 1967. They paid out 10 cents, which is kind of interesting little fact. And they have a repurchase program. So this started at 10% premium over book. They increased it to 20% over. And then a year or so ago, they modified it yet again to whether Buffett and Munger believe the shares undervalued is the test. So this table here is just fourth quarter repurchases, and you can see these separate time frames listed and the prices that are paid, which will give you a sense for the valuation that Buffett and Munger place on Berkshire Hathaway. And they do emphasize here that they won't purchase any shares if it will bring cash and cash equivalents, one of which being treasury bills, below $20 billion. This graph is mandated by the SEC. I'll kind of skip over that. And we'll stop there for now and continue with the financials, get into some specific numbers.